Okay, welcome back, fellas. Our training session today is on the subject, or rather, it's going to be an introduction to the concept of price attraction points. And before I go into looking at charts and maybe some structures, I just want to give a kind of brief introduction to the subject itself and to the type of methodology which I'm going to be describing here. First off, if we kind of look at standard application of trading techniques, every trading system, methodology, or approach which you'll ever read about or which you've ever seen is usually focused upon finding a reason for entry, right? So you could be looking at a support resistance level, pretty much like we do. We use support resistance, we use flips, we use walls. You could be using some kind of moving average. People use momentum indicators. People use harmonic structures on screen, FIBOs, FIBO confluences. I've even seen people discussing about stuff which is happening in the greater cosmos and the trajectory of a particular planet and you know, Mercury and Venus and Mars and where they are in the solar system at a particular time, and looking to take entry off of any kind of signal which is given as a result of these systems, right? So with any regular trading system or methodology, the approach, the traditional approach is always about how do I take a good entry, and once you've taken an entry, you had cause to, you define your stop loss, and then you hold your breath, and you're holding your breath because you're very much hoping that the price is going to go and reach a particular target, and you may define that target. You'll put a take profit target there, and you're just holding your breath and waiting, right? Once you've pulled that trigger for the price to go and reach that target. Now, the idea of price attraction points is something a little bit different. It's a little bit unorthodox. It's not the traditional way of trading. Rather, what it's to do with is identifying something on screen which is a target and saying, well, the price must reach my target, therefore I'm going to take a trade in that direction, right? Now, this is something which is not something which is ordinarily possible, right? If unless you have a lot of capital, right? But if you were to put that capital to the side, and if you were to put that leverage to the side, that's the discussion which I want to be having, right? Or it's not something which is, if you're going to be trading in a particular direction because of a price attraction point, because of the reason why the price must reach a particular point, all of those kind of regular things which are in mind about stop losses, about how much leverage is being used, about how much a trade can go against you, all of those kinds of things have to be taken out of mind. So this is a little bit of an unorthodox discussion, right? It's a wide discussion. It's a kind of discussion that ordinary sensible people would not be thinking about, right? But it's something which we're going to consider. And maybe just to give you an example of what I mean here, if we're looking here at this chart of Euro AUD, and if I said to you that the price here on Euro AUD is going to reach 140, right? And if I knew that it was going to reach 140, and if you knew it was going to reach 140, today the price on Euro AUD is at 27.27, right? So we're looking at a target which is 1,300 odd pips away, right? But we know that the price is going to reach there. Maybe there's a tipster, and he said to you, I've just spoken with all the central banks in the world, and they're going to make a combined effort to make Euro AUD reach that particular price point. And you're really convinced of this idea that it's going to reach that price point for whatever reason, and we're going to come and look at some reasons in a while, right? So what would be the best trade for you to be taking? And the best trade for you to be taking at that point, obviously, would be to be looking for the price to reach that 140 area. Now, if I take an entry here at 27, I don't know when this is going to happen, right? That is this something which is going to happen today? Is it something that happens tomorrow? Maybe this is something that takes 6 months to happen, or maybe it's something that takes a year to happen. But if I knew that it was going to 140, then it doesn't matter where I take my entry. It doesn't matter if I take my entry at 27. It doesn't matter if I take my entry at 20. It doesn't matter if I take my entry at 15. If I know it's going to a particular place, then I have to target that price point, right? And I have to take a trade targeting that price point. Now, as I tried to mention earlier, there are some drawbacks to this, right? So the first drawback is timing. When is the price going to reach that point? And timing is something that can sometimes make this approach, in most instances, something which is not practical, right? Because you can't always tie up your funds and you can't always tie up your equity waiting for a year or waiting for 2 years or 5 years for the price to go and reach a particular point, even though you have every reason to believe that it must or that it will. Similarly, equity is another reason which can sometimes make this approach not very practical, right? So, we're trading on leveraged accounts. You might be trading on 50 to 1 leverage, 100 to 1 leverage. If you're into extreme sports, you're probably on 500 to 1 leverage or something like that. So that kind of leverage, it doesn't always make this approach practical, right? When it does become practical is when you have, or when you're able to see a price target somewhere where the price must reach, and you see the price heading in that particular direction, right? That's the point at which it becomes practical, because then you're saying, look, the price is heading in that direction, so now it's reasonable for me to start targeting it. And the second is that because it's heading in that direction, I can define a stop, and I can define a limit at which I know I am wrong for targeting this now. So I can define risk, and I can try and take something which ordinarily would not be very practical and turn that into something which is more practical, right? That is the kind of basic idea behind trading price attraction points, right? So what makes it not practical is time. What makes it not practical is the kind of leverage that we use when we're trading, because you don't want to be targeting a particular price point and what you're finding is the price is heading constantly against you, taking you into drawdown, because if that continues, eventually what's going to happen is that you're not going to have an account left to trade, right? But if you have a price attraction point, a place where the price must reach, and you're convinced that the price is going to reach that place, then once you see the price heading in that direction, it overcomes those impractical ideas of time and of leverage. So that is the kind of basic idea behind price attraction points, that there are places on a chart which you are able to decipher where the price must reach, right? And once you've decided that the price must reach a particular place, then you can start targeting that price once the price starts moving in your direction. And this is something, it's like I said, there's a whole kind of debate here about what's going to be practical and what's not going to be practical. That's something that you're going to have to work on and something you're going to have to work out. For now, what I want to do is just to kind of briefly introduce the subject, that you can look at a chart and know in advance where the price is going to go. All right, that's what I want to introduce. Now, this is a subject which I've been studying for a number of years now, and it's something which oftentimes it's helped me pass the time, but being very conspiratorial and having that kind of conspiratorial mind, and being a pattern hunter as well, staring at a screen, looking at charts for the last few years, I think I've isolated a number of price patterns which occur, structures which occur on screen, and when I see those structures, I know what's going to happen next. And not just knowing what's going to happen next for one particular wave, but sometimes for 2 waves, 3 waves, 4 waves, you have a kind of general expectation about how the price is going to behave. And having that general expectation about how price is going to behave allows you to enter into some pretty good trades, because it's something that you've seen happen before, and then your expectation is that this is something which is going to then your expectation is that this is something which is going to happen again, right? So what I'm going to I mean, in that process, like, I've isolated a number of patterns. I think I have 6 confirmed patterns and 2 possible patterns, and over the course of time I'm going to introduce you to all of these patterns, but in this first instance I just want to show you one particular structure which I tend to notice quite often, and and I'm always kind of pleasantly surprised by the fact that the price always returns to that point, right? So I tend to spot this structure more in the bearish wave than in the bullish wave. And so I can't say whether it occurs in the bullish wave or not, because I don't tend to have an eye for that. I tend to have an eye for the bearish wave. And when I see this structure occurring in a bearish wave, I tend to get very, very excited, because I think, okay, you know, I know what's going to happen now. You're going to run away from here, but at some point in the future, you're going to come back to this price level. And I've spent a lot of time messing about as well with box projections and trying to work out, you know, is there a way I can predict when that price is going to turn, when it's going to start heading back in that direction? Is there a technique that I can use to start targeting it? So what I'm going to do today is I'm going to show you this one particular pattern, just this one particular structure, and I'm going to go back and I'm going to show you some historical examples of that, so that you'll see it repeating over and over again, right? That this is a structure which occurs again and again and again, and whenever this price structure occurs, eventually at some point of time in the future, the price ends up coming back to this level, right? So once you see it happening a few times, you kind of get the idea, right? That you can isolate this structure on your chart, this price structure, long in advance of price ever reaching there again, but you know that the price is going to reach there. And sometimes that sets you up, sometimes that will set you up for targets, and it will set you up for it'll set you up for fantastic trades, because it lets you hold on to that position until the price reaches your target, and you know that that is the point at which you need to kind of call it quits on that structure and be exiting a trade very, very healthily in profit. So like I said, it's a little bit of an orthodox discussion. It's not your standard entry technique. My advice about this whole subject would be that that to listen and to watch and be entertained by it, right? So you take it for its entertainment value first and foremost, and over the course of time, as you sit and you watch price, this discussion will start having greater meaning, and that is the point at which you start applying it as part of your trading technique, right? So this isn't something that you jump headlong into and you find a structure on screen and you say, right, I'm going to start playing this, I'm going to start targeting it. It's something that you watch, you observe, you let it become a part of your collective experience or your holistic experience as part of your trading experience, and at that point you start taking what's valuable from it, and you start using that in your trading. So so here's the structure which I'm going to show you today, and like I said, over the course of the coming weeks, I'll show you some more of these structures, and I'll show you all the chart examples so that you can see how they are. Remember, every time we discuss a technique, it's an independent technique from everything else that we've discussed. So when you're marking these structures and you're charting these structures, you chart them and you mark them independent of every other technique that we've discussed. Okay. So here's the first structure that we're looking at, right? We're looking in the bearish wave, the price is falling, and this is a structure I think you're going to recognize once I've drawn it. What will happen is that the price will double bottom, and you'll have a false break to the north. Once you've had that false break to the north, the price will come down. Sometimes you have a little consolidation, and then it will collapse. All right? Now, what I've noticed is that this double bottom structure tends to be significant. Right? And we trade support and resistance, and ordinarily what we're trading is that support turns to resistance or resistance turns to support depending upon the direction of the trend. And so ordinarily, if we're looking at that structure, we'd be saying, you know what, if the price reaches back up here, then I want to be selling, right? And I'm going to be looking for support which is established here to turn into resistance, right? Now, the observation which I'm making is that when I've looked at this particular structure and I've seen that double bottom form and I've seen the price break down through it, and I've looked at it and I've thought, you know what, when the price pulls back to this area, I ought to be selling. What I've found is that the price is always pulling back to this area, right? Not sometimes, not often, yeah, but always. Every time I've kind of noticed is the price has pulled back to that area. So what that says to me is that when you have this type of structure on screen, this is a price attraction point. The price is going to break down, and once it's finished breaking down, it's going to turn and it's going to make its way all the way back to this area. So that to me is a price attraction point, and so if the price is here, I know that it's going to come back there. If the price is here, I know it's going to come back. If the price is here, I know it's going to come back. If the price is here, I know it's going to come back. It doesn't matter how far down that price falls. I can always look at that particular structure and think, you know what, at some point in the future, the price is going to return to that point. And like I said, it pretty much always does. It may not go there in a straight line. It may not go there in a short period of time, all right? But it will end up returning to that point. And this is something which I find quite amazing on screen when I see that structure, that it just happens and it repeats, that it repeats over and over again, right? So this is the first particular structure which we're looking at. Now, I've spent some time trying to identify when does it turn, and I've spent time trying to work out, you know, is this ABCD, right? Is there an ABCD going on here? So maybe the distance of the first fall will be the distance of the second fall, and there is something in that, in doing those measurements and working at ABCD, but it's not an exact science at which point you start looking for the turning point. So sometimes I've seen it go the full ABCD. You know, if she fell 200 pips before she formed that structure, then she falls another 200 pips afterwards. Other times I've seen that it falls another 100 pips afterwards, and falls another 100 pips through the level, down about halfway, and then starts making its way back. So how far she continues, that's not something which you can always predict, but she's going to come back to that level. That's something that I tend to be fairly certain of when I see a good clean structure. I have a name for this, right? And it's not the most creative name. I call it a mid-wave structure, and the reason I call it mid-wave structure is that ordinarily it marks round about the halfway point in any given particular wave, right? So it's like the halfway point normally, and so you do tend to get that ABCD. There are a whole bunch of halfway structures, mid-wave structures that I've identified, and again we'll look at those in time, but this is the first one. But what you do tend to find is that the price at some point will always retrace to this level, right? So let's turn towards the charts and take a look at some examples. We're looking here at EuroCAD in the first instance, and it was quite easy looking back at EuroCAD and finding these structures, because I've tended to notice a lot of them on EuroCAD in any case. But here's the first example, right? So we have quite a strong bearish push. There's our double bottom, and the price ends up breaking through, and then she comes back and retests that area, right? Once she's retesting that area, you can see there's a little bit of a reaction there, but eventually she ends up breaking through it. That's fine. What we were looking at was for the structure to be retested and for the price to come back to this level, which is exactly what we're witnessing in this given example. If we were to do an ABCD projection on that, so here's ABCD, and you can see it worked pretty well from an ABCD projection point of view. In fact, I mean, there's several points where you could draw that ABCD projection from, but generally it seems to work around that ABCD area. But like I said, be warned on that. with these ABCDs, sometimes I've seen it go much further, right? So I've seen it go A, B, C, D, E, F, G, H, I, J, K, right? It's not a rule that after the ABCD it's going to turn, but that would be a point at which I would first start looking and saying, all right, we've done an ABCD. Is she going to turn from around this level? And I would start looking for a sign, right? But and remember here, the reason for looking for that trade is because there's a target, there's somewhere for the price to reach, and that's what we're isolating. All right. All right. Let's go back on this Euro CAD chart. Okay. So here's another example. This one's a very clean example, right? So you've got that structure, and there's the price falling, and then if you look, she comes back, right? And she retests that structure. You have support, and support turns resistance, right? So having isolated that structure on screen, it would give you a very clear idea that at some point the price is going to return to this level. If we're trying to measure the ABCD here, you'll see what I'm talking about. So so here's our AB, there's our CD, and we can probably go again from the top of that structure. So you know you've got A, B, C, D, E, F, G, H, I, J, K. I don't know how many times, right? But nevertheless, you can see, you know, in the first instance, she may have dropped to the tune of about 150 pips or something. Is that right? Yep, that's 150 pips. And the next fall was to the tune of about 300 pips, right? So she extended twice as far. If you had started targeting that at the earlier point, you could have got yourself into a fair bit of trouble, right? But nevertheless, if you knew that the price was heading to back to that level, you would find a way to manage that position. So she pulled back, and in this case, she acted as resistance. And in fact, she didn't break through that price. If you're scrolling out a little bit, you can see whenever she pulled back generally towards that area, she was falling down again until you had the larger fall here. Okay, so let's go back on this, and I'm sure I had some more examples, although we're going to be going back now into 2000 and 2011, but still some significant examples. Let's have a look. All right, so here's another example. Strong fall, you get that. Okay, we should change the color of this, I think. All right, so you get that strong fall, little pullback there, double bottom structure, and then the price collapses. And again, if you're looking, if you box off that area, you can see the kind of reaction that she got, but the price pulled back to that area. If I was going to do an ABCD measurement here, if I was taking the AB from here, you kind of get the idea, right? That she didn't make the full extension before she ended up pulling back, but pullback she did, right? The pullback, you got it to that level. Once you've identified that structure, you'll pretty much notice every single time that the price does end up pulling back to that area. Let's see if we have another example here. All right, so here's another example. Just going to zoom it in a little bit. Here's another example that we have. So again, quite a strong fall. You get that double bottom structure, and the price collapses. And again, if you're looking, she ends up making a move back towards that region. Now, if I zoom out and I'll show you, you can pretty much see exactly what happened here, right? So here's the structure that we've isolated, mid-wave structure, and she ends up pulling back. She ends up pulling back to that region after having broken down, right? So fall, double bottom, false break, and carry on. If we're measuring an ABCD here, again, you'll see several extensions of this ABCD, right? So there's the first extension. If you wanted to take the next one from the high, she went about twice the distance from that structure the first time, right? So Uh, that could have you kind of swinging both ways as well. If you're able to identify that structure when it's forming and the price ends up breaking through, you're going to get a decent push through that level, right? But at the same time, you need to be aware she's going to make her way back, right? She could break down halfway, she could break down to an ABCD, she could break down to twice, sometimes even 3 times that distance. But when you have that structure in the middle of a wave, it attracts the price, and the price always makes its way back to that particular structure. Let's take another look at another example. This time it's on cable, and we're looking at the daily chart, and I just need to pull back a little bit. All right, so this is cable, and this is the daily chart, and here we might be able to identify a couple of structures. All right, so that's the first. This is the second, and you can see that she pulls back quite comfortably to the first, and after that she pulls back quite comfortably to the second, right? So like I said, it's a significant structure on the screen. When you see it, you just have to be aware of it, that it's there. At some point, that structure is going to become a target. If you were playing this on cable, you were looking at a target of almost 2,000 pips, right? That is how significant that structure was, right? It's very, very significant structure when you see it on screen. Somewhere where we saw this structure most recently was on Euro AUD. All right, so here's our structure on Euro AUD. A strong fall, you get that double bottom with a little bit of a false break, and then the price ends up breaking down. And again, if we're looking at the price area that's been tested, is that support, which is turned to resistance, but the price critically pulled back to that area, right? Just one quick kind of note I want to give, just to make sure it's absolutely clear. We're talking about a mid-wave structure, so what that means is that you see that fall, you see the structure taking place, and then you see another wave after that, right? So this is the point at which you start identifying it, right? That once you've got that first wave, you've got the double bottoming false break structure there, and then you've got that continuation wave. It becomes identified that, look, that structure is right in the middle of the wave, right? That's why I call it a mid-wave structure. But it's important not to kind of be looking at it in a sideways consolidation, right? In a sideways consolidation, it tends to matter a little bit less. You want to see clear breakdown waves, and that's something to be aware of, right? So this is the first pattern which I want to discuss as part of the series on price attraction points. Like I said, over the course of the coming weeks, we will be discussing more of them, right? But you just have, when you see it take place, be aware of it. It's a very, very interesting structure. The price does end up returning to that level, which means it can make a very, very good target. Okay, and that's it in terms of the subject matter which I wanted to discuss on this. If you fellas have any questions,